I'll be taking you through the Redefine Company Update Report. This is ahead of the results coming up in the beginning of next month. We have a buy recommendation with an intrinsic value of $4.50 and upside of 25%. And Redefine's interest cover and gearing have remained stable over the past 4 years. And as we know, we're a high interest rate environment, and the concern is that when you're rolling over debt in an environment like this, your ability to cover your interest costs may begin to deteriorate, and your gearing may also begin to worsen. But Redefine has been able to keep that afloat over the past 4 years. Then we've got the correlation to bond yields, which provides a base for upside potential. It provides a good base from a macroeconomic perspective as well. In combination with the company specific one, which leads into that property fundamentals. So we are looking at property fundamentals. We're thinking that they're at a turning point. And as we know, the big asset type that's topical at the moment is office, and how it's changed structurally over the last few years with the adoption of work from home. But a big determinant for the property stocks when it comes to office at the moment is going to be the type of office asset that you have and the quality. And with Redefine, about call it 80% of the office assets is either A or P grade, which is more of the higher grade assets. So what we expect there is a bit more of a stabilization in terms of a deterioration of the specifically the office fundamentals. And then just in terms of the thesis, Redefine is it's diversified property stock. It's got a good balance of exposure in retail, office and industrial, with industrial having done quite well. It's got a strong balance sheet, which I touched a little bit on in terms of the interest cover and the gearing. It's got a high dividend yield, and the strong relationship with the changes in bond yields provides a good base for upside as well. And because we think that the property fundamentals are a turning point, and the valuations are quite low, we think that it's properly attractively priced, and that's how we are maintaining our buy recommendation on Redefine. And then just in terms of the top 3 points that we change our minds, is more so a deterioration in the property fundamentals. So what we've been seeing is that retail has been coming back quite nicely. Industrial is continuing to perform quite nicely, but the big concern is office there. But we think that they're more so on a turning point of better fundamentals from this point onwards. The other one would be an outlook to change to government bond yields increasing in terms of decreasing, because that's the other half of the argument, because of the strong directional relationship, to be more specific, that price performance valuation and valuations have with government bond yields, as well as margins experiencing more pressure than we expect. We know that the big cost talking points for property is usually the property expenses. And another one now, because of the high interest rate environment, is the interest expense. So we do expect a bit of pressure on our margins, but anything more than our expectations would begin to make us to worry.
Thank you very much for joining us today.